3.5 hours from now, Mario Draghi will begin to speak, and the market will react. And the market, I have to tell you, the market reactions to Draghi's ECB press conferences have been much more dramatic than the market reactions to non-farm payroll. Non-farm payroll was always the one that used to create the biggest reactions, but this is just an indication of how things have changed. We used to react to market news. Now we react to the things that people say. The central bankers have made themselves more and more important as they show themselves less and less able to do the things that they wish to do or that they try to do. So big speak tomorrow. Okay. What does the Fed talk about on the Beige Book report? You know, the funny thing is there used to actually be a Beige Book. And that's when they used to put that report out. Now it's done online, of course, but it used to actually be a Beige Book. So 24 hours from now, you have ECB, and 48 hours from now, you have non-farm payroll. Look at the estimate on non-farm payroll, only 161. Wow, talk about low standards. I mean, everything's supposed to be so great. How is it possible that we're only creating 160,000 jobs per month? I mean, that's really weak. That's really pathetic. So that should be interesting. Now, I wish I could be here with you the next 2 days, or at least for tomorrow. But you'll have Wayne here on Friday. Definitely check out Wayne's presentation on Friday, Wayne McDonald. But I won't be here. I'll be at MIT, Massachusetts Institute of Technology. All right? It's class reunion time. So, you know, I'll be there at the Big Dome up in Cambridge getting some chowder. And, you know, having a few coldies. I am not an MIT graduate, interestingly enough. Great question, Carlos. Actually, my better half is the MIT graduate. She's the smart one. But I have, through my connections through her, I have used MIT's research for some of the work I've done on currencies. For example, I did a lot of interviews with people who survived currency collapses. All of those were arranged for me by MIT. So I never went to MIT, but I do have a connection there, and I do work with the people there on various things that I've been involved in. Interestingly enough, right? So that's pretty cool. All right. But I do love it, and I love their attitude up there. They're just so smart. They're so darn smart, it's scary, right? So, especially for some guy from Philly like me. So anyway, of course, it's a good thing you don't have to be a genius to be a currency trader, right? You just have to be able to create a plan and let it play out. So, and speaking of letting it play out, since we last spoke, we've crept about 30 pips closer to the third target on Aussie yen. That's still coming down. The third target is still about 50 pips away from me, 45 pips away from me. And, you know, I'll be going away for a few days, so I'll be perfectly happy if this trade closes out today, and I can just, you know, batten down the hatches and hit it again on Monday, right? And that would be fine with me. We are a graduate from the School of Hard Knocks. Absolutely, right? Absolutely. The great thing about being a currency trader or any type of trader is, you know, nobody can stop you from doing this. Market doesn't care if you're short, tall, if you're pretty or ugly, if you're young or old. It doesn't care about your race, creed, color, sexual orientation, or sense of humor. It doesn't matter. The market doesn't care. It's a meritocracy. Unlike so many other things in life, right? You can, you know, you're going to Michigan? Am I? Oh, okay. Um, so anyway, yeah, go. It helps. Yeah, no question. But yeah, that's yeah. Well, Singapore is a great example. Gray says it sounds like Singapore. Singapore's a great example, man. And Singapore's the kind of place where, like, like if I were in Singapore, right, and I had no job and no education and no prospects, I could still become a real estate agent. And real estate still crazy in Singapore? I could still become a real estate agent or even a rental agent and and make a good living there while I figure out what I want to do with my life, right? Um, so there's so many different things you can do. A question coming in from Abbas. Let's talk about dollar yen. Abbas, I see your question. I'm going to get to dollar yen first, and then I'm going to go to Aussie CAD from Carlos. Grace says there will always be buyers and sellers. Exactly, right? So you put on a nice clean shirt and you get a haircut and you shine those shoes and you show up on time and you do the work and the next thing you just work harder than everybody else and you're going to win. You're going to win. Um, that's a beautiful thing. Um, I love Singapore. I haven't been there in about a year. I really want to go back. Um, all right, dollar. Let's go with dollar yen first. Dollar yen has been plunging, and Abbas, you probably missed my first session where I talked about this. Of course, the yen is getting stronger because Abe deferred a tax increase, and so you're seeing the yen drop here. And that's beginning to look like a lower high, lower high, lower high, like a series of lower highs, yet another lower high, right? And Carlos is short this. I think it's going to keep dropping. Um, if it falls too hard too fast, then the Bank of Japan becomes a possibility. But I think it's going to continue to fall, partly because the S&P 500, which correlates to this currency pair, the S&P 500 is at resistance, right? It's right at resistance of 2100, which is a tremendously important level. You can go back a long way and you can see this. It's like a brick wall. You hit it and you drop. And when the stock market drops, the yen tends to get stronger. And what is happening today, pre-market in the stock market? I see red. All right, I see red coming down. All right, so we've hit that wall. So I think dollar yen continues to fall. So how far does dollar yen fall? That's kind of tough to say. I mean, you were in this area of support here earlier, and you're kind of breaking through that now. You're really breaking support right now. I think it's got more downside, and it has momentum. I would look at maybe draw a Fibonacci on here and say you're right at the 38.2 right now. Try to get that on there just right. And raise this just a little bit. And there's your 38.2 on dollar yen. So you're like barely through the 38.2. That could turn around and come back up. But it is a commonly used retracement. There is support along that 50% retracement area. So you have actual support, right, the lows of these candles, that coincides pretty closely with a 50% retracement. So I would be looking at 108.50 right now in terms of targeting on dollar yen. Okay, so I do think it continues to fall. It's got more downside ahead. All right, and one of the things that happened is all these folks who were long just got caught on the wrong side. So I think you have a lot of people in this trade who are now going, oh my God, I got to get out, right? And it's going the other way. Now let's go to Aussie CAD, which was requested by Carlos during the prior session. And this, is this a trend reversal here? I think it could be. You see this sharp move down and this little basing area and then this pop up. Take a look at this on a weekly. Right, and what you have is an engulfing candle. I think what's happening right now, you're engulfing it's not perfectly engulfing. It does not engulf all of this wick, but let's just say that anyone who sold short last week on Aussie CAD is getting spanked right now. And this is because both countries just reported GDP. Australia's GDP better than expected. Canada's GDP worse than expected. And of course, we had that big fire in Fort McMurray is definitely hurting Canada's GDP going forward, right? So this looks to me like, at least on a fundamental basis, Aussie should go higher now because of this against Canada, because of these two opposing fundamental reports on GDP. But you also have this big weekly engulfing candle here. Look, it's only Wednesday, gang. It's already engulfed last week's candle. By the way, it's engulfed the prior week's candle too. It's like, ate two candles, right? This could have some staying power. I would have a stop under this low. I bet Carlos has a stop under that low. I don't know if he's long. Carlos never even told me if he was long or short. But if I look at this, measure this downward area, you see that 38.2 comes in pretty close with this resistance level here. 38.2 retracement of the downward move is at about 96.45. So I've got 96.45, but there's also this guy right here at 96.25. So I see a lot of resistance between 96.25 and 96.45. That means there's still plenty of upside, but if you're long, that's where I would be looking to get out. Okay, so Abbas, we got to. I missed some questions in here. Okay. Regarding next week's balance sheet report, could we look into a rate hike possibility, says Grace. I'm going to go back to Aussie CAD in a minute. Grace, which currency are we talking about here? Let me know which one you're referring to. So I want to get long at 95.85, but looking for a potential entry and target. Sorry. Yeah, where to enter on this thing is a good question. Because, this really is a reversal type situation. It really is. And, I can tell you what I think is going to happen, but it's really kind of hard to pin down an actual entry point from this. I mean, if I could turn back the clock, I'd want to buy it lower, before this big move shot out of this area. At this point, I'm probably hoping for an hourly oversold if I want to try to get long. 60-minute chart RSI. Right, we'll plug the RSI in there as soon as the data is ready. And it's overbought now, right? So see that overbought, overbought, overbought. But we would be looking for something like this, an oversold reading. So if it pulls back enough to create an oversold reading, then I would be looking to buy it. Then I would be looking to get in. But it's really hard. It's easier to look at this and say, yeah, it's engulfing, but it's hard to look at it and say, where should I get in? Because I feel like I'm chasing it now. I feel like I'm chasing it. But it is a reversal situation and a big reversal candle on the weekly. Okay. Tough nut to crack there, man, for the entry. I would just say try to find the RSI oversold on the 60-minute chart. Other than that, engulfing candles are interesting, but it's really hard to create an entry off of them. I don't want to buy up here. I would feel like I'm chasing. Okay, so be careful with that one. I wish I could be of more help on that one, Carlos. It's a little bit of a messy chart. Balance sheet report next week. So, by the way, for you New Zealand traders, it's dairy day. It's dairy auction day. They're having it on Wednesdays this week. Dairy auction results coming out They don't have a specific time attached to that report, so we don't know exactly what time that'll be coming out. Probably within the next couple hours, we're going to get the dairy auction report, and that tends to move the kiwi. Okay, so just a heads up. Okay, financial accounts of U.S. Now let's see, first of all, if I can even go ahead to next week. Let's see if I can do that on this calendar next week. Right, and filter none except for U.S. And now I believe I'm looking at next week's stuff here for the U.S. All right, financial accounts of U.S. So let's see what we got here next week. Labor market conditions, unit labor costs, yada, yada, yada. Mortgage applications, job applications, jobless claims. Are we referring to the monthly budget statement? You know, looking for a balance sheet, like imports versus exports. Really move the market the way they used to. I'm just chasing my tail at this point, so let's go back to having everything and go back to this week. Okay, so let's click that link. Federal board, what's next? Do we have a date on this? Oh, financial accounts of the U.S. Don't if I tell you it's not going to be that important. Next week, so June 9th. Hey, Dragon Boat Festival next week. I wish I was in China. Here's trade balance for the UK. It's not on here. Wholesale inventories, natural gas, it's not listed on here. You know, I wouldn't be surprised if it's not that big of a deal. Whatever it is, it's not listed on here. Okay, we could spend all day chasing our tail on this one. I'm willing to that the market it's not considered a big market mover because it's not even on the calendar. Okay. Just remember, there's a lot of things, there's a lot of information that comes out that doesn't really move the markets. The market's much more likely to be moved by a speech, even from a Yellen underling, than it is from things like U.S. trade balance, U.S. budget reports, money supply, etc. The market used to really care about those things, but these doesn't really. It really doesn't care about those things. So I don't know why we're focused on that particular thing, but you know, it's not even on the calendar. I doubt it's going to create any type of movement in the market. The only thing that I'm worried about creating, you know, we focus on the things that move the market. What's going to move the market this week? Draghi's speech tomorrow, non-farm payroll on Friday. That's it. There's really not much else to say. We also, if you're trading Kiwi, GDP report today. We've got a slew of ISM numbers coming up today. Those could be minor market movers. Right? ISM manufacturing, that's coming out in a half hour. Construction spending in the U.S., that'll be interesting. Real estate seems to be catching on here in the U.S., so I'll be looking for construction spending expected to jump up to 0.6%. We'll see if that holds true. Right? But these are the things that move the market, right? These are the things that move the market. And speeches, mostly, right? So Draghi's speech tomorrow will probably create the biggest move in the market of all. Okay? Any special reason why you're focused on financial accounts of the U.S., Grace? Any special reason for that? Okay. All right. Let's move on. Right. So here's euro pulling back a little deeper. Oh, I wanted to show you British pound. So British pound, big red today, and dropping down. These I'll give you the results of these polls. 2 polls came out this week. Both of them, 52% leave, 48% remain. Right? Let's see what the now we also have a YouGov that came out today that shows a tie. This came out this morning. Remain 41, leave 41. That's the YouGov poll, and it was taken over the past 2 days. It was taken Monday and Tuesday of this week. Right? So that's today. You have one poll that says they're tied. And then we also had 52 to 48 for leave. And that was in 2 separate polls. One was by The Guardian, which is a big newspaper in the UK. All right. And so it's tough to say. Let's just put it this way. At this point, nobody really knows, and markets hate uncertainty. So it looks like we're heading down toward 144 and perhaps lower. Will the market overreact 3 weeks from now when this thing is finally over? Well, if it does, I think I know where I want to get in. And if you've apologize if I've shown you this before. Look at all the support at 140. If I were to put a line right at 140, that's right here. That bottom line is 140. All I see are wicks on the monthly underneath 140, going back 30 years. So it doesn't stay under 140 historically, at least for the last 30 years. Every time it's come to 140, it may have stayed under for a day or two. We're looking at a monthly chart here. But the tendency is for the price to pop back up once it gets under 140. So who am I to argue with that? If the vote does come out for Britain to exit the EU, I figure we get a gap down to 140. I'm a buyer. If we get a gap to 140, I'm just a buyer right there. But I don't necessarily go all in. Trying to catch an exact price point in a highly emotional market is a guessing game. And I think a situation like this could call for multiple entries. Not adding to losses, but instead of entering 100% of the position at one price, a price that we don't know if it will ever be hit or if it's even a good point, because the market probably overreacts. I think a better idea might be multiple entries. So instead of buying 100% of the position at one price, we could buy 50% of the position at 2 separate prices, or 33% of the position at 3 separate prices, or 25% of the position at 4 separate prices, or 20% of the position at 5 separate prices. That last one is probably how I'll go. Some of those entries will be above 140. Some of them will be below 140, and they'll be spread out evenly. So I'm not trying to pick the exact price point where pound dollar falls to if there is an overreaction. Of course, the pound is moving lower, and that's a sign right there, of market sentiment. Markets hate uncertainty, and there's a ton of uncertainty right now. If you look at it on this chart, we were at 140 just a few months ago. We popped up. Could we be heading back down there? I think it's very possible. But I don't really see any reason to be involved, ahead of the report. These polls are going to come out like every day, and they're going to create jumps up and down in the price depending on how each individual poll comes out. You could guess right, you could guess wrong. I don't see an edge there. To me, it's a coin flip. Question from dollar CAD, 1 hour oversold at a critical area and bounced back. Now there's confluence. Dollar CAD on the hourly. Let's pull it up real quick. Dollar CAD has been fascinating. There it is on the monthly, right? There it is on the daily. And Carlos is talking about on the hourly, this area around here, if I go to the 60-minute, right? And so this is exactly what I'm talking about with Aussie CAD, right? You want the pullback that creates the oversold signal in RSI, like this one here that Carlos is referring to right now. And that was a great entry point. And you're looking for something similar to happen, right? So that's what you would be searching for. So markets are open. Dow is down 77 at the open here. S&P is down about 8, although the NASDAQ is green. So something must be going up out there. Hopefully it's Apple. He said hopefully, right? AAPL. Pull it up. Give me something green. Meh. It's down a little. That's beginning to look like a cup and handle, is it not? Cup, meet handle. I think you're going to see a cup and handle on the Apple. And I think we're going to fill that gap. All right, gang. I'm out of here. Everyone have a wonderful day and run a wonderful rest of your week. And I'll see you again next week. Take care now. Bye-bye.